August already. Can you believe it? And yes, this is really close. I'm at the office, so it's not the usual setup, but that's okay. But we have amazing, amazing news today. Um, Rates almost, just call it the rates have been cut. Not officially, but they have, and let me show you what I mean by that. So the current rates, call it 6.5-ish. This is the lowest we've seen in a year since, well, not a year, since Liberation Day, when the tariffs, were going to be like 100 million%. And all of a sudden, we moonwalked 2 days later and the rates then rebounded back, or I shouldn't say rebounded, went back higher. But this is the best they've been, right? It's tied for the best levels we've seen in a year. They're mid-6s. So why do I say rates have been cut? Check this out. Remember, green is good. This green means the rates are getting lower. Up in this case is good. And look at that big one from last Friday. Why did that happen? It happened for basically one of two different reasons, both related, both the same reason. Job reports every Friday, first Friday of the month, job reports comes out. And if you've watched these videos with any regularity, you know that I've been very critical, as many people have. It's not just me. But job reports are just a big joke. Have been for about 2 years now, where they say all these jobs are created, and then later on they get revised lower, lower, and lower. So by the time the quote unquote real numbers are done, many, many months behind the rearview mirror, they are significantly off to the tune of like hundreds of thousands. And so finally, the number looked relatively decent and bad in the sense that it looked like fairly more accurate, but it was just not a great job number that came out last Friday. And on top of that, the CEO, the person responsible for doing that, is no longer there, basically fired. So that is one reason why the market thinks that, man, with all these different revisions and different data coming out that would suggest all these past revisions now showing much lower and weaker job markets, it's now a 94% likelihood that the Fed's going to cut in September. So September 17th, I think it is when they're meeting. And on top of that, the Fed now has some openings. One of the Fed members decided to go back to teaching, so she's leaving, and President Trump's going to fill that position. And the speculation is it may be with the new Fed governor, or soon to be new Fed governor, because Jay Powell retires in May from that position. So all that to say, the equivalent of what's going to happen in September. So people are thinking, oh man, the Fed's going to cut rates in September. I think whenever they do it, it's going to be this. It's already done. I think it's already taken into consideration. I think the markets are at 94% at this point. The market's already kind of baked into the cake what it is. So rates are good. They've gotten real good. They're mid-6s. So again, we will be reaching out. Matter of fact, good segue here. We're going to try to reach out to folks to help them realize now may be a good time to look at refinancing if you finance something in the 7s. But this is just what I just said as far as like, the whole shakeup that's going on. But the refinance activity, it already is starting back up, just with rates coming down a little bit. But you can just see how the applications, so this isn't rates, but this is applications. For the majority of this year, the applications have been higher than they were last year, just because again, rates are steadily, little by little, not much, but that big exaggeration on Friday, it may stay. HELOCs, so second liens and even first liens, selfish plug, yes, we do them really well. So if you do want to look at that, we have some other products that are first lien HELOCs that are super cool. They're amazing. Again, we'll get into that later, but not today, truthfully, but they're just really cool. But they are they've jumped 8.2% year over year, and they're up 30% since 2021. The big reason, HELOCs a lot of times are second liens. So when rates come down, people go get the second lien money, but they're not touching their first mortgage because they probably have 3 or 4%. So it just makes sense to go get that second in most cases. Here's a cool thing, trigger liens. Whether you know it or not, when somebody gets their credit pulled by a mortgage company, the 3 credit bureaus, Experian, TransUnion, and Equifax, they sell that data. They sell the client's information, saying this borrower just decided to have an inquiry made for a mortgage, and then all of a sudden the consumer is bombarded with phone calls. Stinks for them, stinks for us, because then we got to sit there and tell them why all the online lenders stink and they're horrible, and I agree they are. But now it is passed and heading to President Trump's desk to get it signed 6 months from now. They're going to give him a 6-month wait. So as soon as he signs it, 6 months from now, the trigger leads will be no longer a thing. There will be 3 examples of why somebody can call you. It'd be if they've done your mortgage, they service your mortgage, or if they're your bank. So it reduces from the hundreds of companies that are out there buying these trigger leads and then beating you up on the phone. So that's a good thing. I thought this was interesting. Sucks for Texas. Well, I don't know if you say that. Let's take a different point of view. I'll give you the glass half full. But Texas is among the 12 states with inventory above the pre-pandemic. So look, overall, you say, man, that stinks. It's a soft market. On the other hand, at least means we have inventory. Look at the Northeast. I mean, they're still sitting there where nobody wants to sell or move. So at least now, if we have inventory, it means that hopefully more and more buyers can come in there. And hopefully it just kind of cools, and the market's been relatively cool. I'm not looking for a decline in prices anytime soon, but at least makes it where it's not as aggressive to where, if somebody waits 12 months, it's not going to be the end of the world. But I just thought that was interesting. So we are literally at 32%. We are the highest. Texas, Florida's in there, Arizona. But it is interesting. Now the Northeast just literally is not moving. And where can you snag a home for under 300 grand? You can. It's hard to find. But I thought this was interesting more than that. If you look at that highlighted stat, existing homes, the median, so not the average, but the median, like of all the homes that are sold, pick the one in the middle. It's actually more by an existing home than the new construction homes. And that makes sense in today's world because, again, if inventory is a little high here in Texas, builders have to sell home to keep money coming in the door. Joe homeowner doesn't need to sell his home. So builders are selling, they're discounting, they're probably using a lot of the money to help people get those lower, artificially lower rates to help with affordability. So I understand there's a difference, but it's dramatic. So it basically says it's the largest on record, that $18,000 drop. So that's crazy. In the South, we're almost as bad as Midwest in terms of just where we are, but at least the price points were not. Look at the Northeast. The new home sales price like 800 grand. Dadgum. So anyway, features of the week. How to choose the right home for you. We've talked to a lot of first-time home buyers. I think with rates dropping, people are excited to get back out there. They've been wanting to, but haven't been able to with rates where they once were. So this is just the featured article of the week. If you're looking to buy your first home, get your budget, do all that stuff. Check us out. I'm sure I'll put a link to that somewhere around here. And then the meme stuff. I'm not a Ken Paxton fan. I won't get into the reasons why. I'm just not. But from the sounds of things, he may have committed mortgage fraud. He claimed 3 homes as his primary residence. No, can't do that. So we'll see what comes from it. I'm sure, like all politicians, he'll get off and maybe with a hand slap and love the picture. Just don't like the guy, and it just shows that he's doing things that he shouldn't be doing. So that's not new for him. That's probably why I don't like him. I had to fact check this. So the left side over here is my screenshot because I saw this pop up. One of my people sent it to me. I thought it was a joke. And I went to Smoothie King's website. There is a ketchup, a Heinz tomato ketchup smoothie at Smoothie King. That is disgusting. But not online for $5.70. I might buy it. And by the way, that's for 20 ounces. I don't need 20 ounces of ketchup. Anyway, the meme of the week, the client, we can redo our pre-approval. We just bought a truck. And then, supposedly me, the mortgage lender, dead. So, good times. And then lastly, thank you to our clients. We've gotten a lot of, we always, I say always, but we do. We're really good at our jobs. We've got a phenomenal team. As always, we appreciate the encouragement. And as always, follow, share, subscribe, forward, all that fun stuff. Do what you do. Appreciate you watching as always. And hope you have a great day. And remember, when you think mortgage, think mortgage.